and welcome to Your Stocks in the Mumbai studio. I'm Ekta Batra. Well, it's turning out to be a session which is largely consolidatory at this point in time. So we just about to have the Nifty, which is up around 0.3%, and we have the Bank Nifty, which is higher by just about 0.5%. So outperforming a tad bit as compared to the other indices. Just to watch out for individual stocks, because we have stocks such as Shree Cement, Ultratech Cement, Grasim, all of these which are gaining quite significantly. In fact, Shree Cement is the top gain on the Nifty. It's gained around 4.6% today and has gained around 10% this month. So good amount of traction taking place in specific stocks. There is interest coming in on frontline stocks, and the advanced decline ratio, that's the positive, has sustained on the advancing side through the trading session and hasn't seen much of a deterioration. As you can see, the gap has been quite wide between the green and the red line. But we do have a lot to track in terms of queries. We have with us Richard Jain, who's joining in on the technicals, Parthiv Shah, who's joining in on the fundamentals to answer all of your queries. Richard as well as Parthiv, welcome to the show. Well, Richard, before we kick off the queries part of the show, give us a sense in terms of how you would be approaching today's trading session, specific stocks that you like.
Yeah, hi, very good afternoon, Ekta. Very good afternoon, Parthiv. We have seen that a V-shaped recovery has taken place last week after that Tuesday's correction, which clearly indicates that the buying interest is much stronger. And now my index is trading at its all-time high, and whenever market trades at all-time high, we take retracements of the previous correction to come out for the target levels. And 127% retracement of that last week corrections is indicating a possible targets of around 23,900 on the index. So I think much possible that we would continue its uptrend in the near term towards 23,900. And a couple of sectors which are looking quite positive. One is the cement, where since morning we have seen good long build-ups in most of the stocks in the derivative segment, and also technically a good consolidation breakout with good volumes have been seen in stocks such as Ultratech Cement. So Ultratech Cement within the cement basket looks possible targets of around 11,200. This is one stock which we are recommending to our clients as well to create fresh longs. And second is even if you look at chemical space, a bit of underperformance has been seen in this entire sector in last few months, but some signs of a turnaround has been seen, where price up moves today in specific stocks such as Aarti Industries have been supported by good volume. So Aarti Industries is another name which one has to take any stock specific exposure. One can go long at current levels and look to add if we get any dips towards 55 to 660 for possible near term targets around 720.
Okay, all right. Well, let's get in some queries now. We have Rajvi Pal, who writes to us from Mumbai, holds 40 shares of Tata Steel, which is bought at around 132, wants to know what to do, whether he can continue to hold on for a longer period of time, sitting on a profit at this point on Tata Steel. Parthiv, let's come to you on this one. What would you recommend on Tata Steel? Do you think that it's prudent to hold on, or maybe take some profits?
Good afternoon, Ekta, Ruchit, and our viewers. Yes, certainly, I think our sense is that Tata Steel looks extremely good over the next 3 to 5 years. One of the key reasons why Tata Steel valuation used to say depressed was because of the European operations. Now, if you see the product mix in terms of the geography mix, rather, I think if you see the Indian operation is quoting at almost 62% of the overall consolidated revenue. And we all know the fact that Tata Steel has had its Indian operations run extremely efficiently, and they have full captive iron ore captivity along with 25% in coking coal. That's why I think the Indian division has always been highly profitable. Going ahead, I think if you look at the capex plans, currently I think on a standalone basis they have 21 million tons of steel production, and going ahead, thanks to the Kalinganagar expansion along with the Bhushan and the Usha Martin expansion, I think they will be having a capacity of almost 40 million tons by 2030. And the flat component of the steel will be almost 27 million tons, and the longs will be almost 13 million tons. So I think it will be a fantastic product mix for the company. And almost in terms of the consolidated basis, I think India will be quoting almost 75% of the total revenues, which will help to reduce the European operation losses, and also I think de-risking that. Going ahead, we believe that there will be at least 10 to 12% sort of volume growth over the next 5 years, which is, I think, rare in the steel industry. So Tata Steel, even here at around 10 times EV/EBITDA multiple, looks good to us.
Okay, all right. And technically, how would you approach the stock? Ruchit?
So, technically the stock is looking quite strong. A high top, high bottom structure has been taking place on the weekly as well as the monthly chart. Secondly, if I just look at the recent data of last couple of months, the stock did consolidate in a range, but whenever there were corrections, buying was seen when the stock dripped around that 160, 150 range. Even last week in the Tuesday's fall, the stock formed a support around that 160 mark, which is also the 100-day exponential moving average. And the good thing is that his buying price is quite at lower levels, which gives a good margin of safety that in case if we see no small bit of corrective phases, then no, you should not worry much about that, since he has bought it for mid to long term. So from a near term perspective, I think 197 to 200 should be expected, where he can again take a review on his positions. But at current levels, certainly the call would be to hold the existing positions.
Okay, all right. Well, we have Adhiraj now, who writes to us from Nagpur. He holds 12 shares of HUL, which he's bought at around 2,358. He wants to know the future prospects of his investments. Well, really, FMCG has been the toast post the elections. It's just about consolidating for HUL today. But in general, technically, how would you approach the stock? Do you think that there's more to go? What's the target, the stop loss, Ruchit, on HUL?
So I've seen a long underperformance compared to the markets rally. The stock made an all-time high of around 2850 in September 2021. And post that, it has been into a long period of corrective phase. And somehow it seems that the corrective phase is over. And we do not expect any significant price-wise down move now. So downside seems to be very limited. And the good thing is that in the month of May also, the price up move which was seen from 2200, 2250 was supported by very good volumes. So after a long period of corrective phase, I think the stock has now started gradually forming a high top, high bottom structure, up move supported by good volumes, which are a good sign. The stock may head higher again towards the 2700, 2800 range in the near term. And if that gets surpassed, I think the stock has potential to test even 3000 levels over a period of time. It may not move very fast, but slow and gradual move could be expected. So should hold on to these positions.
Okay, all right. Well, what about you, Parthiv? HUL, what are the future prospects? Do you think that it's a good rural play to have, or are the valuations probably going to stem a little bit of the enthusiasm?
Absolutely. I think the biggest concerns are with the valuations. Even after the recent rally, we are talking of on a forward basis valuation multiples of around 54 times. And at a point in time where I think we are seeing very tepid volume growth. And this is what quarter on quarter HUL management has been guiding for in terms of a lot of stress in the rural segment. No doubt, I think there's a lot of confidence, and I think post the coalition government, I think we saw a lot of rally in the consumer-facing stocks in an anticipation that this is now going to be the focus area for the government. And come in July, I think when we are expecting the budget, I think a lot of focus will happen in the rural segment. I think the fortunes of this particular sector certainly lies on how the monsoon pans out and how the spread of the monsoon is. So far, so good. I think early indications are good. But if I were to talk of a 2 to 3 year view, with such valuations, I think the returns in HUL will be pretty tepid. It's better to focus on other FMCG companies which can be more nimble and are not totally dependent on the rural segment. Names like Marico look good. Dabur also, I think is a compelling story. So these are the type of stocks which could outperform HUL over the longer horizon.
Okay, all right. Well, we do have another query coming in from the FMCG space. Nidhi Parik writes to us from Surat. She wants to know whether she should invest in Dabur in order to get exposure into this entire space. Parthiv, over to you on this one.
Yes, I think on the similar lines, what we like in Dabur is their product portfolio. If you see the home and personal care, which is almost 48.6% of their portfolio, the healthcare segment, which is recently growing segment, which is almost 31.3%, and food and beverages comprises of around 20%. I think the advantage that likes of Dabur have in the FMCG space is that I think their product mix helps them to kind of grow in terms of volumes at a higher single digit levels. And going ahead, I think expecting the fact that the rural economy should improve, I think likes of Dabur should be in a very strong position to grow their volumes. And if you see in terms of margins, I think the deflationary pressures have helped in the last few quarters, and the tweaking of the ad spends have also helped. They've held up margins to 20%. So we believe Dabur is a good long-term stock to hold on.
Okay, all right. Technically, any call on the FMs on Dabur, Ruchit?
Well, structure is much similar to what we spoke for HUL. The stock, even Dabur made a high of around no 660 in September 2021 and has not performed since then. So I think many of the FMCG's names are looking no much similar, where the corrective phase is behind now, and these names have resumed its broader degree uptrend. So I think yes, a good stock to buy even at current levels, but keep some room that in case if we get any kind of dip in the near future towards 570, 550 range, use that dip as a room to as an opportunity to average. So buy some quantity at current levels and keep some room to average in case if we get any dip in the near future.
Okay. Well, Abhay Singh now writes to us from Mumbai. He holds 22 shares of ICICI Bank, which he's bought at 895. He wants to know what to do, whether he can buy more shares at current levels. He's sitting on a good profit on this one. He's bought it at a good level also. Technically, do you see further upside? Any targets, Ruchit, on ICICI Bank?
So last few weeks, the stock has traded in that range of 1050 to 1160, 1170. So I think it seems more of a consolidation within an uptrend. So till this 1050 level is intact, the technical structure still remains quite positive. So I would recommend to hold existing positions only with a stop loss below 1050.
Okay, stop loss below 1050 is what you're targeting. And, corporate lender there, Parthiv, what would your call be on ICICI?
Yeah, I agree with Ruchir's view that, if at all there's any decline to the tune of 5 to 10%, certainly I think the investor can add to his position. It's the second largest private sector lender, having a fantastic book, and almost 70% of their loan assets are like A and A plus, which is a very credible thing. Mr. Sanjay Bakshi has done a lot of cleanup in this bank. If you see the capital adequacy, it's almost hovering at 16%. The deposit growth has held up pretty well, which has been a challenge for a lot of the other peers. And I think the loan book and the type of assets they're sitting on, I believe that, over the longer horizon, it will create a lot of value. Quoting it around 2.8 times forward price to book multiple on a FY26 basis, which is not essentially cheap, but I think it's a fantastic franchisee having a lot of subsidiaries, which can also add a lot to shareholder value.
Okay, all right. Bullish call coming in on ICICI Bank. Well, on that note, we need to take a short break and come back with the news that we have the markets, which are quite steady, not much of a volatile situation now as compared to what we saw in the morning. The Bank Nifty is the one star performer today with a gain of around 0.5%, and the advanced decline ratio is the other metric which is standing out quite steady. We'll take a break and be back with more queries. Stay tuned. Welcome back. Well, as we've been pointing out, it's quite a steady day for the markets. There's no real big movement which has come in as of now. We have a couple of stocks which are gaining specifically, so just watch out for it. And it's really sector agnostic from the broader markets. We have GSFC from the fertilizer space / chemical space, which is up around 6% JB Chemicals and Pharma from the pharmaceutical space, which is up around 6% and a couple of others such as Prestige Estates, which is doing well. So that stock has been on a tear this year. It's up 56% and up 4% today. And giving it company is Interglobe Aviation, which has also rallied over 50% this year. So both of these stocks, Prestige as well as Interglobe, both outperformers and managing to put on some more weight in today's trading session. Both of those stocks up anywhere between 4 to 4.5%. So good going for the markets at this point. But a couple of mid-cap IT stocks such as Mphasis is down 3.5% at this point. Some news on Landmark, just watch out for that. But let's get in some more queries. We have Parthiv as well as Ruchit on the show to answer a lot of your questions that you have. We have Dhruv Kapoor, who writes to us from New Delhi. He holds 20 shares of State Bank of India, which he's bought at 300. He wants to know what to do, whether he should remain invested in this particular counter. His buy price is excellent for SBI. Quantity is less. What would you recommend on this one, Parthiv? Do you think that just hold on? You'll see further upside on SBI. It's a portfolio stock. And also, would you recommend maybe buying at these levels also?
Absolutely, Ekta. I think the investors' buy price has been fantastic, and today I think SBI has been one of the stellar performer in the PSU pack, and not only the PSU pack, but it has kind of beaten all of its private sector peers as well. Once being called a laggard, and for donkey years, I think the stock didn't do anything, and that was a point in time where the asset quality was not at all good. And today we are talking about the return ratios looking as bright as a lot of private sector peers. Going ahead, I believe this will continue. I think it is one of the most profitable banks in the country, and even globally, if I were to point out. And yet, I think still there is some arbitrage in terms of the valuations. If you look at the current trail multiples of ISBI, or even on a forward basis, it is still quoting at a 10 to 12% discount to some of the larger private sector peers. And our sense is that with such numbers and such return ratios, and the management is also guiding for very good ROAs and ROEs in the next 2 to 3 years. I believe there's still further scope for re-rating in SBI. So hold on to this position.
Okay, hold on to this position. And Ruchit, what would your recommendation be on that?
Well, since last few months, the corrections which have been taking place in the stock are more of time-wise corrections rather than price-wise corrections. So, which indicates that the price-wise downside seems to be very limited from here on also. And the good thing is that the buy price is quite low, so the margin of safety is quite good in the stock. 720, 750 is a good support range for the stock, which I think in case of any correction should be the maximum downside. And if we get any such dip towards that levels, then that would be a good opportunity to, in case, to add fresh buying over there. So hold on to the existing positions, and if want to add more positions because the quantity is less, then any declines towards that 750, 770 if comes, then that take it as an opportunity to add more to your portfolio.
Okay, all right. Well, we have Ritu Sharma, who writes to us from Mumbai, holds 5 shares of Lux Industries, which she's bought 1,000. She wants to know the prospects of her particular investment. So she's sitting on a profit at this point in time. And well, quantity again is on the lower side. So anyway, Ruchit, what would you recommend on Lux?
Well, if we compare it to the mid cap rally or mid cap and the small cap rally that we have seen in last 1.5 years, then the stock has seen a bit underperformance compared to the broader markets. Although recently there has been some pullback, but the stock has not taken out its resistance yet, which is around 1650, 1700. So I think the long-term trend is not changed to positive yet. Maybe the downside should be limited, but since the broader trend is not up, then so I think there could be better opportunities compared to Lux in the markets to capture on. So sell on rise would be the call on this one. In case if we see any kind of moves towards 1550, 1600, then that should be used as an opportunity to exit from the stock.
Okay, all right. So that's on Lux. And any Parthiv, any fundamental view on the stock?
Apologies, Ekta. This is not the stock that I'm tracking.
Okay. Anything within that space that you recommend, or in the broader markets, which would be a pick?
Oh yes, I think if particularly talk about the retail segment, then in terms of the retailers, something like an Aditya Birla Fashion, I think looks attractive at these valuations. Of course, the management is now working towards unlocking a lot of value by the demerger, and I think that makes very good strategic sense. And going ahead, I think that should unlock a lot of value. Even Trent is something that we like, and I think they have a fantastic growth story going ahead despite the massive re-rating and the valuations. But it's a portfolio compounder stock, so that is something that we like in the retail space.
Okay, all right. Well, we have Shankar, who writes to us from Bangalore now. He holds 160 shares of IRB, which is bought at 60. Wants to know what to do, whether to book losses or to exit at these current levels. Whether he should exit or he should probably book his loss. Sitting on a profit at this point in time, whether he should book his profits or exit, or sort of probably regain a little bit at these levels. But in any case, if you want to get a fundamental view, Parthiv, what would you recommend?
No doubt, I think IRB Infrastructure is India's largest BOT operator, having a portfolio of almost 36 projects. And operationally, they have almost 12,500 kilometers of roads. And going ahead, they're going to add almost 2,500 kilometers more. But historically, if you see in the infra space, I think the road companies have been very volatile in creating sustainable shareholder value. We are very upbeat on the infra theme, no two ways about it, but we'd like to play it via ports, say something like an Adani Ports, or via more bigger conglomerate like L&T. So I think if one has to play in the infra space, it makes more sense to play into L&T or Adani Ports vis-a-vis buying into IRB infra.
Okay, all right. And technically, Ruchit, IRB?
The broader trend is not negative, but I think relatively the stock, I think, would rather continue to trade within a broad range of 65 to 80 in short to medium term. And comparatively, if I look at the other stocks within the same sector, then NCC looks much better, which has technically given a breakout from a consolidation with good volumes. So I think over a period of time, I expect a good outperformance from NCC over IRB infra. So I would suggest to take an exit from IRB and rather shift to NCC.
Oh, okay. All right. You'd rather shift to NCC. So that stock has given good returns also in the past couple of months. But on that note, Ruchit as well as Parthiv, we're going to thank you for joining in and giving us all of those answers to a lot of the queries that we had. For the markets, the mid-cap index is just about flattened out, so it's probably going to move into the red. So it'll be important to monitor whether the advanced decline ratio actually can sustain at these levels, which it has been through the trading session. But as of now, looks quite steady, the advanced decline ratio. But do watch out for the mid-cap index, which is just about 23 points higher. Let's see whether it manages to sustain from these levels. Well, that's all the time that we have on the show. But do remember to email us your queries. We'll address them with our experts. Closing bell to take you through the last hour of trade.